So what are we debating? What are we deliberating? And what are we discussing on this edition of Tracking Trends? Well, what has changed for RBI to change their outlook on GDP? And what has not changed? And what has not changed in terms of inflation understanding? And that why Reserve Bank of India is still of the view that tightening is not off the table. Is India poised for a robust growth? And how will bond yields and currency move from here? So a bit of a macro, flavor to our today's, discussion. And to take this discussion forward, I will be joined by Jayesh Mehta in moments from now. But before we do that, I just want to establish that the bond yields reversal, I think, is more like a global phenomenon. Now look at US bond yields. They are down in last 1 month by about 50 bips. German bond yields are down by 50 bips. UK bond yields down by 30 bips. Japan about 8-9 bips, and India is down by just 2 bips, even though for India the interest rate base is 7.24. US bond yields has come down from 5 to 4.1. Germany has come down from 3%, closer to 3% to about 2.5, 2.2, and for UK also sub 4, above 4 has become sub 4, and Japan nearly 0.8, about 1%, that has come down substantially. So why Indian yields not falling, and why global yields falling? And how should one read into today's RBI communication, even though the governor today was sounding slightly more hawkish than what everybody anticipated? Jayesh Mehta, Managing Director and Country Treasurer with Bank of America, joins us now. Jayesh, nice to have you. Thank you for joining us. You are looking at the frame slightly differently today. Maybe that's your camera angle. And is that the way how Reserve Bank of India looking at the at India? ऊपर से नीचे देख रहे हैं.
No, the problem is, that there was a desktop challenge. So that's why I'm calling up from the phone. So that's where the angle issue.
So that's my point. Even Reserve Bank of India is looking at the economy from a different angle, right? Or bond market is looking at a market from a different angle. Globally, bond yields have come down, but Indian bond yields are still at 7.25.
No, but I was just hearing you talking about all the world yields coming off. But let's not even forget that if you really look at last 3 years, right, what is our high and low, right? Our high and low has been what? 580 one touch, maybe 760 one touch. Average, we have been between 6.5, 6, 7.
I think we lost his audio. Like I said, a bit of a camera angle issue. Okay, can we go to Kunal? Well, like a day off, right? Everybody's taking it easy. Jaldi ghar jao. Let's enjoy the first 4 days of joyride. Don't worry about today's market action.
Well, it's the Friday mood, Nikunj, and undoubtedly, I think the selling and the profit booking is just purely based on maybe this week being entirely or extremely good for the market. So I don't see any change of pattern, change of guard from the bulls as such. But yeah, I think, the good part about the market so far today is even in the last half an hour of the selling getting a bit aggravated, you have a lot of banking names which are making a comeback. ICICI Bank is back at the day's high. You've seen good strength coming from HDFC Bank, and even the likes of Axis Bank, etc. They are making a very good comeback on the intraday basis. So I believe that's probably a strong indication that there's profit booking or there's selling at one end of the market, but then there's a strong bit of buying in the other end, which is the private sector banks.
So buy the decline?
Or
wait for further decline to buy?
Wait for further declines to buy. But for the private sector banks, I think it's a good time even to buy them on rises.
Okay, so if you missed the gap up, if you did not participate on Tuesday's follow-up, time to perhaps buy an ICICI Bank or Axis Bank now?
Yes. Okay. Add to that HDFC Bank.
Okay. Oh, Jayesh is also back with us. So Jayesh, you were mentioning the point that for world, the bond yield went from 1% to 4%. Or 1 to 5% for the US market. For us,
4%
the bond
to 5%.
Sorry, I mean actually
okay.
sub 1% became 5. I mean if I count from the COVID low.
Correct. And now for us, it's like, if you really look at our mean average for 3 years, it's been 6.5 to 7.25. But of course, low and high was 585 one touch and maybe 761 touch. So from that perspective, we are more or less good. In fact, with the kind of supply, with the kind of policy rate right now which we have, which is even though repo rate has not been hiked, but its liquidity has been kept tight and almost hugging till last 2 months, except bearing this week at 675, almost 0.25% higher than the repo rate, right? So from that perspective, we are okay. I think we will see some buying coming in January onwards for the index, but otherwise we should be really okay about the way our bond yields have moved, because even when the US moved from almost 100 basis points, we were at the same level.
Do you think today's credit policy, in a sense, is more like what everybody was anticipating and expecting? There was a tinge of hawkishness, but I guess it is too early for Reserve Bank of India to come out and say that, okay, we won a war against inflation.
No, absolutely. I think I would say not hawkish, not bearish. I would say this was a normal policy where they have taken a normal pause. And from that perspective, of course, at every time he has been highlighting our medium-term target is 4%. Having said that, people may keep on assuming, there was a question in the Q&A also, that will you then wait till 4 before you cut? But I don't think they will wait for that. I think at least for the timing, it looks good. Liquidity will come in at some point of time, because there is a lot of overhang on government spending. They cannot infuse liquidity and then government starts spending, then the system will be over surplus on the liquidity. So I think they are managing it a little bit fine-tuned, erring on the tightness side of the liquidity, which is fine. And I think once we see June or something when the US cuts rates, maybe only after that we can expect some rate cut or something. But before that, we can actually ignore any rate cuts or anything coming in. But having said that, bond yields will come off. I think you have a huge demand. I think next year maybe FPI equity and FPI debt will compete with each other to come to India.
Okay. I'm asking this question to some of your peers, which is equity market peers, that in the run-up to the election, where do you see the Nifty moving? So from a bond market standpoint, what has history told us? I mean, is there a pre-election phase which matters, and is there any historical evidence what has happened to bond yield?
So if you really look at it, earlier, people used to be always worried about, as and when the election comes in, there'll be fiscal indiscipline and, populist measures and all that. But we have seen with this government in 2019, it didn't happen. And with the state election, the probability of that actually has come down dramatically. So I think this government has been keeping the discipline. And I think 2019 is the only thing which we had. So 2019, they actually didn't go overboard on the subsidies and stuff like populist measures and all that. So this time there is no reason. Of course, people in the back of their mind, they have that. But I don't think there is any reason for people to really look into that. Most of the traders would kind of discount that.
Do you see the bond yields moving from, let's say, December to May? Because there is election. B, the smart money has already started coming back into equity market, and immediately after election, you have the JP Morgan bond inclusion. So there are three things now. First, a floodgate of liquidity which is opening up. Then you have central elections, and then you got the JP Morgan inclusion. Everything is happening in the next 9 months.
So from that perspective, we expect, some people have already started buying. We expect some people to start buying maybe second week of January onwards. I don't think people are going to wait till June inclusion, so there will be enough buying coming in with the new calendar year coming in, starting. So people will start building up that expectation of flows, including foreigners, on the expectation of June inclusion. So I think that money should start pouring in from second half of January.
My final question is that for those who, let's say, bought into US treasuries globally, October and November has been like a dream run. Yields are down, and they are down in a very meaningful manner. Is there a trade in the 10-year paper in the run-up to the election for somebody who, let's say, wants to say, okay, I'm going to take a tactical bet in, let's say, just buying the GSEC in the run-up to the election? Is there merit in thinking on those lines?
Not from a run-up to the election point of view, and anyway, a 10-year benchmark is expensive, right? So, but there are other securities, particularly the one which will get into index value securities, maybe 6 years, 15 years. But that all will start moving once the buying starts coming in second second week of January. I think we may see another retracement of 10 basis points, but beyond that, we won't see much retracement there also, because the 10 basis point without any policy action should be good enough for retracement.
Thank you for joining us. And well, this time the camera angle, in a sense, is in sync with what the RBI view right now is. So thank you very much.
Thanks.
You know, with Kunal, I just have to turn here. Right? Kunal, if you're a bull, you need to stay focused, right? I mean, if I say kal thanda tha, aaj dhila hai, it's a very myopic view, right?
Yeah, it's a very myopic view because Nikunj, after 1500 points of rally,
तो
100
का
point,
चश्मा लगा के ना देखे, दूर कर चश्मा
100
लगा
point
के
की volatility में इतना, I mean, I don't think so the view should change for the indices. And it's an obvious kind of a volatility because you are at the round strikes for indices.
What is round strike?
21,000 and 47,000 round digit strikes for the indices. So there's bound to be some fight from or tussle between bulls and bears at those strikes.
Does it happen round strike? Does it matter?
Yeah, it matters a lot. So even for example, 19,500, if you remember, there was a point where the Nifty stalled at 19,500 mark, and I think it took some 7 or 8 days for the index to climb above those levels. And I think I would probably expect something similar this time around, maybe 1 week of consolidations.
You know, the interesting bit is, before we take a break, is that mid cap has not recovered, small cap has not recovered. So point we were discussing, 10-15% money move back into large cap
caps.
stocks. Maybe that trade is at play, that playbook is at play.
Exactly, yes.
I think we'll have to wait till next week before we get a decision.
Yes, and such kind of selling is also one of the indications that sector churning has started.
In this case,
small
cap
caps,
churning.
yes, market cap
Sector
churning.
it is a
Yeah,
asset classification.
asset class.
Okay, appreciate your time. Thank you for joining us.